Hi everyone, Ken is at it again. His business is expanding. Way to go, Ken! And up till now, he has been operating as a sole proprietorship. Ken has heard that there may be better ways to structure his business, but what is the right option for him? He has spoken with friends and more experienced sellers, but he wants to hear about his options from a CPA. Ampersand is here to help. There are several ways to structure Ken's business, and his tax advisor is going to start with asking what type of business Ken owns. For this example, let's assume Ken owns an e-commerce retail store and sells on Amazon FBA. There are many options, but to keep it simple, let's discuss the two most popular forms of single-owner business, the Limited Liability Corporation and the S Corporation. A Limited Liability Corporation is commonly referred to as an LLC. While each state's laws are unique, an LLC generally protects Ken's personal assets from liabilities his business may incur. For tax purposes, LLCs are pass-through entities, which means that Ken will report the net income from his business on his personal tax return, just like he currently does with his sole proprietorship. Ken will pay both income tax and self-employment tax on his net income. Whew! What do you think, Ken? Doesn't sound very complicated at all. But what about an S Corporation, you ask? An S Corporation is commonly referred to as an S Corp. Similar to an LLC, Ken's personal assets are generally protected. An S Corp, like an LLC, is a pass-through entity, meaning the S Corp itself does not generally pay tax, but Ken, as its sole shareholder, pays both income tax and self-employment tax on the net income from the business. One advantage of an S Corp is that Ken can have his S Corp pay him a reasonable employee salary for his services. Ken and his S Corp each pay 1/2 of the employment taxes on this salary. Any net income that remains is subject to income tax, but not self-employment tax on Ken's personal tax return. Disadvantages to an S Corp are that it requires another tax return to be filed and many complex tax rules to be followed to remain in compliance. While any business structuring should be undertaken with the advice of a qualified tax advisor, this is particularly important with an S Corp. Now Ken feels better. He is glad to know his options. Now all he needs to figure out is his business name and logo.